Here we go. Okay, we are live on Facebook, LinkedIn, and YouTube. All right, good morning, friends, and thank you so much for joining us. My apologies for my very messed up voice today, and I've been slightly under the weather since last week. Actually last week, Tuesday, before we went live, I did like a quick video. I was so exhausted. There was so much going on, and I knew it. And of course, starting Wednesday, I was literally down. But in any case, thank you so much for tuning in. For those of you returning to see the show, welcome back. And if you are new to the show and first time joining us, please give us a little thumbs up or a little note in the comments so you know you've just joined us. I want to encourage you all to go ahead and subscribe or like the page, depending on which platform you're using to watch the show. So that way, whenever we schedule our next session, you'll know that you'll get the notifications. Just a quick introduction. My name is Maureen Torossian. I'm a CPA and also a chartered management global accountant. I'm an experienced auditor and CFO, a CPA advisor, and a transformation coach. I've authored a couple of books, and I've put the links in below. And just because of my voice, I'm going to skip through, some sections here, and then just to mention quickly, the reason I like to call myself, and this is a question that came up last time, is the CPA advisor and transformation coach, is because I use my valuation MT methodology to transform businesses that are reach their first million to their 10 million and more. So today, as usual, I'm joined by my featured guest and my partner, as it relates to all tax stuff. It's Mr. Pedro Gonzalez, CPA. Thanks for being here, Pedro.
Good morning. So I'm going to relieve you.
Thank you. I was completely gone.
Yes.
I'll let you take over.
You're a true warrior. You're here, even so I give you kudos for that.
Thank you, sir.
So yes, good morning. And Pedro Gonzalez, business and tax strategist, over 20 plus years of experience, and bringing to our clients is the value on lowering their taxes, improving their cash flow, and developing exit strategies. That's how we can help you and how we help our clients in maximizing learning the rules of the game, so then they don't get hurt in the process. We have a very clear path of tax wise business owners, and that's what we educate. Help them access to information that can make better decisions. We worked on an ebook. The link is being provided. I'm also working on a book for S corporation owners and taxation. There's some great opportunities in there and how to utilize it properly to lower your taxes. And today's topic is going to be an interesting one. So.
Very interesting topic today. Just a little reminder of some of the discussions we've had in the past, so that our audience can always check back the other videos, is that we've talked about self-employment related taxes. We've talked about, importance of bookkeeping and making sure your records are kept well. And some business strategies we've talked about. In recent episodes, we've talked about, and then this is part of the series of tax planning. And we talked about, how we use life insurance policies sometimes, retirement plans. And of course, today's really, really most interesting, conversation is how investments and cryptocurrency is going to play a role in tax planning. So there's some new regulations coming up, and I'm so excited to hear from Pedro and all the nuances that we're getting down the line regarding especially cryptocurrency. Stage is up yours, Pedro.
Yeah, no, this is an interesting topic.
Very interesting.
Yeah, because we have had conversations about this, and again, I think a lot of people are gonna get some, like I was telling you before, some nasty surprises when it comes to the cryptocurrencies. what happened is that in essence that there has been a lack of documentation and guidance from the IRS, and that has caused a lot of I guess in essence the non-compliance.
Right.
I think that the first uh, guidance that was issued was the IRS notice in 2014. Was the first time that the IRS kind of started diving into this topic. And then in 2019, they issued a further guidance about and clarification on the topics of the cryptocurrencies. But even as of today, the topic's still unclear. There's still some areas that's not very clear yet, and so they're still being worked out. Now, one thing of interest is that, and that why I have, and I'm glad that we're going to discuss this, is because
Yes.
the IRS, and especially in the recent budget, you will notice that the IRS received something somewhere around I can't remember the exact number right now, top of my head, but about $70 billion of additional dollars. And when you look into the how those dollars are going to be used, you will see that a good portion of that is going to be enforcement, which is in essence IRS audits.
Right.
And the other area is technology, in particular to address the topic of cryptocurrencies. So you can see, and the IRS has been very vocal about, pursuing this topic, and they know, you and I have talked about this in the
Yes.
past, is that due to the increases, like for example, the couple $1 trillion programs that have been passed, how are they going to pay for it? Well, they need more dollars, and they know that there is this access to some that they know there's not being reported, and that's correct.
Right.
We're going to go heavy into the taxation of that. So, but what I wanted to kind of focus today in particular, there's a lot that we can be talking about, but one of the things, at least I wanted to bring some awareness to the people listening, is that the problem is that the lack of assistance or for example, take the traditional somebody that invests in the stock market. You have your mutual funds, you have the traditional brokerage firm.
Yeah.
What happens is at the end of the year, you receive this form, the annual summary, the 1099-B, and you give that to your tax preparer. You're done. You know what I mean? So you're there tracking my movements.
Absolutely.
Exactly. So then you're done. You know what I mean? And this is your basis in cases, let's say that the brokerage may have goofed up. Well, I rely on them to provide me the information. This was reported to the IRS. So in essence, you're being kind of removed from the responsibility of tracking the movements of those investments. Now, that doesn't exist with crypto. And as of today, the crypto exchanges have no obligation of sending that type of summaries to you. They're not reporting to the IRS as of right now. So that kind of leaves it up to 100% on your hands to calculate, to report those transactions. So you can see that the burden now falls 100% on you.
Right. That's heavy load for a taxpayer to track all of that. Exactly. Yes.
And so what you're going to find the biggest problem is the calculation of, what exactly is taxable and how much is the gain. Because all of these are moving. And there's people out there that are, buying, selling. So how do you track that?
Yes.
How are you going to be calculating those gains and losses? There's some new developments of softwares out there that are helping, alleviate some of that. But again, it's still up to you to track that and report it. So again, one of the biggest challenges that what I kind of wanted to focus today is the taxable event, and this is something that people get themselves confused. And the reason is, and I think a lot of the confusion is because it refers as a virtual currency. Currency. When you're buying with your dollars, every time you're buying, if, for example, if you take a $100 bill and you give it to me, and I give you two $50 bills. It's not a taxable event.
Right, exactly.
All we did is
it's exact same amount. It's just being transferred in a different currency type. Yeah.
Exactly. So as of today, that event does not cost. Even if you go, for example, when you go to another country and you exchange it for, pesos or
Right.
whatever, that event in itself is not all you have done is an exchange of a currency
Right.
for the currency.
Right.
So, but when you come into the world of the crypto, the IRS, and especially in 2019, made it very clear that that virtual currencies are going to be taxed for tax purposes. It's going to be taxed as properties. Um, so that changes the dynamics. It's no longer going to,
Sure.
they made it very clear. So now nobody can claim, oh, I didn't know. It is, they made it very clear that it's going to be taxed as property. And that changes because now what happens, it raises some questions. For example, let's take a scenario of somebody that bought, let's say, for example, bought a Bitcoin for 10,000 when it was at $10,000 a Bitcoin. So you bought it for 10,000, and now let's assume that it's 50,000. So, and you're gonna sell it. Let's make it very simple. So now you have $40,000 gain, and it will be treated as if you would have sold $10,000 worth of a stock. No difference. You report it on your Schedule D, and you pay your capital gain on that. So that's a very straightforward transaction. Now, but what happens when you take, let's say, a certain currency, like one of this you probably have heard a lot, the Dogecoin. People get so excited with it. And let's say that you, instead of selling the $50,000 worth of Bitcoin, let's say that you took that and exchanged it for Dogecoins. What happens there? Remember, we were talking before, and you're exchanging two similar. What happens there? Well, the answer to that, it is taxable. And this is exactly. It caught some people by surprise because they were thinking, well, I'm exchanging virtual currency for virtual currency. I have not taken the money to my possession. All I did is exchanging dollars for pesos. No, they're saying, no, it is an exchange of property, and it will be taxable. Now, some people have reached out to me and say, well, then, okay, if it's property, then why don't we use Section 1031 like we do for real estate?
Sure.
You can exchange a building for another building and say, okay, well, I'm deferring the gain that I would have had to recognize if I would have sold it. I'm going to pass it to my new property.
Sure.
Well, the IRS just recently, in 2017, is something, again, it kind of probably went unnoticed, and that is that they made it clear that 1031 is for real property, meaning real estate.
Actually, right, exactly. Tangible. It's
exactly.
Yeah.
And so, again, a lot of people didn't catch on that until later, and just until now, people starting to realize 1031 does not apply, and they made it, probably very intentional on this. They excluded, they carved out virtual currencies from 1031 because in 2019, in 2014, they said, the IRS said it's going to be taxed as property.
Got it.
In their mind of people thinking, well, then it's almost like real estate.
Like a real estate property.
Exactly. This is what's causing confusion because one, it's not currency, and number two, it's going to be taxed for property, but it does not qualify for 1031. So, in essence, all the movement that you're going to be doing with the 1031, with the virtual currency is taxable because now, in an example I just gave you, the first one, if you just simply sold it, it's very clear, straightforward. You have capital gain. The question becomes, again, when you start exchanging from one currency to another, it also is going to be taxable. And then you're going to have a taxable event in there that you have to now recognize. Now, you move to another situation that happens, and let's say now you took your virtual currency and you bought, I don't know, now with the past Black Friday savings, and you decided, let me buy a new TV. They accept Bitcoins.
Right.
Now, again, you're thinking currency. You know what I mean? It's nowadays they even have credit cards, debit cards. They access my account. I'm not even going into my exchange anymore. I'm actually going and giving into my merchant make it even simpler now. I can go and swipe this card. The only thing is it's accessing my virtual currency account.
Right.
That's a taxable event for you. So
Wow.
not only you're going to be end up paying sales tax on the is that
On
you
the
have to recognize that exactly. So that is
Oh wow. So yeah, I mean it's almost like enforcing even to an almost excessively, right? Like to make sure like everything goes into through the system instead of being decentralized like we were talking about earlier.
exactly.
Crypto and all of that is decentralized. So
Yeah.
it's not going through the banking system.
Yeah, and then you have to now you get into the situation of let's say for example paying for services or goods. You know what I mean? Not only my example of the TV, but like services. You know what I mean?
Sure.
When, let's say that you have somebody that would accept a professional accepting virtual currency as a form of payment, then again, it's a taxable event for the person paying, and also it's ordinary income for the individual receiving.
Correct. Correct. Yes. Yes. They have to be taxed on that for as an ordinary income. Right.
So those are again events that are happening that at times that they don't realize that what is happening, because again all of this is digital. You know, I mean, it's happening and is moving so fast that they're not realizing. And this is what I'm saying, that they're gonna get some nasty surprises. Uh, Other events that happens for those are really heavy into the cryptocurrencies is something called forks. And this is also cause a situation of concern, because what happens in those, especially what they call the hard forks, is that when they're gonna, in essence, kind of think about, if you recall, in the stock world, what we call the stock splits.
Okay.
And
Yeah.
and those are very common now. But in the case of currency, these virtual currencies, what happens is that they'll give you a new set of currencies as part of this hard fork. Now, you didn't buy it,
Right.
so
You did.
part of
Right.
it. So, but now you're receiving this new set of currency because of this, what they call the hard fork. And what happens now is that you receive this currency, and it's also a taxable event for you. And not only that, it's ordinary income. It's not capital gains. It's ordinary income. You also have situations like when if nowadays that they're also earning interest on some of these accounts, on these virtual currencies. The interest you're earning on those is also taxable, just like ordinary income, just like if you would have a bank account. So you have interest income on those. The other one that you hear about is staking. In essence, they give you quote unquote rewards for buying a specific currency. And so when you buy those XYZ currency, they'll say, well, Marie, if you buy this one, we're going to give you a reward, a certain,
Mm.
0.0001, okay. So, but the point of that is that you're receiving as a reward is also taxable.
Wow.
So,
That's definitely very
yeah,
intricate, right? I mean, it's
yeah.
a
So
lot
you
of
can
things
see,
that most people don't know. I mean,
yeah,
I think maybe they're more aware of the first example you gave us, but the rest of them, I mean, that's a lot to
yeah.
for an average taxpayer to kind of track all of these things.
Correct. And you can see that especially now when the IRS is going to become more aggressive in the pursuit of these
Sure.
events, is that you can see the possibility for these taxpayers to have, like I said, some nasty surprises uh, of uh, of this kind of audits, and then having to report monies
Mhm.
that they probably did not realize. And I'm gonna say the individual that basically had no clue. I mean, there was no guidance.
Right. Right.
So, in as of right now, there's no, what I suspect that probably what could happen is that they issue some kind of amnesty program. They have done in some other areas, and so it's possible that they're going to give some people a chance. And then I'm not saying this that I know as a matter of fact. I'm just saying based on my experience, when I see that
Sure.
there's being uncertainties on clarity about something, they might say, well, we're going to give an amnesty program to allow you to come on board, and you
Right. Right.
voluntarily uh,
Yeah.
exactly. Now that we have the guidance, we're going to allow you to go back, correct, and you voluntarily report it, and we're gonna then either in some cases there's a period where they say we will not penalize you, and then after so many years of the
Right.
volunteer program, we're gonna give you a reduced amount, and then after that we cut it off. But after that, man, we're gonna go after you.
Right. Right.
So those are a couple things to keep in mind that can again give a surprise to some people.
Yeah.
But finally, the other thing to keep in mind that there's because on the same way that there is taxation, there's opportunity for tax planning.
Sure.
And, couple things. At least one thing to keep in mind: gifts of cryptocurrency is treated the same way as gifts of cash or property. I mean, it's not a taxable.
The limit is the same.
Correct. So the gifting, you're receiving the currency is not taxable,
Right.
which again provides some opportunity for planning, charity. There's some good opportunities, but I think that might be a discussion for another day. And if
Sure.
anybody is interested, just to give us a call. You know what I mean?
Yes,
Because there's some
absolutely.
good opportunities, and especially in the area of charitable, setting up charitable trusts as a vehicle. Because one, you can end up doing some good with those gains. You can still have access to the funds, and there's some strategies in here because some people think, no, but if I give it to the trust, then it's gone, and I'm still too young to I would like to use. The bottom line that there's strategies in there that can be set up for those individuals that, let's say, have amassed a certain amount of cryptocurrencies,
Sure.
and especially the potential for gains. And what do I do now? You know what I mean? So there's strategies out there that can help out those individuals to reduce and still have access. And this is the key, that you can still have access to those funds and enjoy a portion of that today.
Yeah, no, that's actually really great point because gifting through crypto. I mean, there's I've noticed a few not-for-profits that are actually signed up to receive either like investment as donation or crypto as well. So that's a great point that you brought up. I really appreciate that. And the gifting limit is still 13 too, or has it changed for 2021?
No, still. I'm drafting like here, but still, it follows the same guidance of the gifting rules. So yeah.
Okay, awesome. And then for our viewers that might want to try to put together some kind of a tracking system of what would you recommend them to use, or if, like you mentioned, a few softwares, but if let's say if softwares they can't get it, but what they can do themselves to kind of track if they started here now in 2021, and hopefully it's not too far back, but just to be ahead of the game when the IRS may come back, like you said, they may ask for, okay, we're going to give you an opportunity to join and then voluntarily report this. What can they do now to start maybe going back and tracking that information? Maybe in Excel or something simple like that they could just say, okay, date, purchase, something, as best they can.
And that's something that we can certainly assist those individuals that it becomes overwhelming. You know what I mean? But let's say, for example, somebody that wants to do it on their own. Yeah, you can use Excel models that some people even use for the stock exchanges. Trade, okay. Where you basically track, at least as a minimum, track when you purchased the coin, the date, the amount, and the quantity of the units that you bought. And the reason the units is important because because of the virtual currency, the Bitcoins, you can buy 0.001, you know what I mean? And then you can trade 0.00001, you know what I mean? So it's important to track the units. So then you can at least say, well, I bought this Bitcoins back in 2013. I bought, because the Bitcoin, we're not trading whole units all the time. You know what I mean? We can be trading fractions. And because of that, it's important to determine how many units you bought and how many of those original units. Let's say you bought 10 Bitcoin way back when they were really cheap. Now you have 10 of them, but then you're not trading today 10 of them, and especially when we're gonna get into the utilizing them to pay for services, pay for go to the grocery store and buy and swipe out that card. It's not taking a whole Bitcoin. What it's taking is a fraction of that.
Understood.
So which one are you taking? You know what I mean? Are you taking the first
Wow.
one?
Yes. Yeah, that's very complicated.
Yeah, it's you know, there's accounting just for that. You know what I mean? To track those movements in the world of the cryptocurrency. Now, a lot of the major exchanges, you know, just to name, for example, Coinbase as one of them. You know, you're gonna find Binance as another one. Most of the larger ones are gonna have. They're gonna provide you the information you're going to be needing, meaning at least the transactions that at least went through that exchange, and that can help you build up your accounting.
Understood. Yeah, because right. So then that sounds like a bank statement type of thing where they'll give you some kind of a transactional list. This is all the different things that happen.
Yeah, okay. What you purchased, what you sold, what you exchanged, because again, it's not only what you purchased or sold, but then any kind of movement between currency one, you moved it into
another currency.
Yeah.
Right, or any split or anything like that. Understood. Well, this was a very exciting conversation. I mean, it's definitely very intricate, and I really hope our viewers really enjoyed this, and I'm sure. I mean, this was really deep conversation. I don't think this type of conversation is happening anywhere else. You know, everybody talks about the purchasing and sale and the value growing and all that, but no one's talking about the real difficulty in accounting and taxation of virtual currency. And I'm so glad we covered it today. So. I'm looking to see if there's any questions from the audience that we may answer. There's no questions at this time. All right, we're getting very close to the end of the show. Any other last thoughts, Pedro?
No. You know, the again, keep in mind that it is the taxability of it. If you have questions, just to contact. I mean, that's the thing you can do. If you're in doubt, just contact. If you want ideas for tax planning or how to mitigate some of the impact of the taxation. But again, that has to be done before. You know, if you already sold it, it's sold. You cannot undo it. It's just if you have a concern, let's say, hey, I have this amount of money building up in a certain currency.
Sure.
And I would like to see how can I minimize my taxation.
Absolutely. Absolutely. And of course, you know, we can help them out not only with the tax planning, but if you just want to, and just a current estimate of where you are at with your taxes, you know, those are also areas that we can help out before the end of the year. We only have a few more months left before we have an opportunity to make some certain actions. So if you are wondering what you should do, you know, go ahead and give us a call and we'll be very happy to help you out. All right. With that said, with my voice completely almost gone,
I know.
I'd like to say thank you so much for our viewers. Pedro, thank you so much for joining me every Thursday on these really exciting, you know, tax, accounting, and business strategy discussions. And we will continue the conversation next week. See you all next Thursday, 10 a.m. on Facebook, LinkedIn, and YouTube. Have a wonderful day, guys.
Okay. Take care.
Take care.